Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this historic Friday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Got a jam-packed show for you folks today. Our guest is Paul and Monica, joining us at 8:20. We also got to discuss the follow-through in CSX from yesterday, some earnings today, IBM, AXP, Schlumberger, GE, Procter & Gamble, also news from Bristol-Myers and Merck, and some interesting HLF news last night and this morning as well. We'll try to get to as much of it as we can. We'll also take your questions, as always, in the chat. Joel, how are we looking at the S&Ps this morning?
Spencer, little technical test for you. One number in the S&Ps. Give me one number that I'm going to mention right now.
I haven't looked at my charts yet, but you said technical, and I assume we were having problems. So thanks for giving me a heart attack. What number are you going to? 20,000 in the Dow.
No, you failed. 22.65 and a quarter, but talking about 22.65 all week. That's the magnet trade, trading up $4 yesterday. Big resistance. This is called 22.70 on the upside. Had three highs in that area Tuesday, Wednesday, and Thursday. Coming back on the downside, we haven't even went red yet on the session, so we'll be keeping an eye on the close. 61.50, things thin under there down to Thursday's low of 53 even. Crude having a flat session here. Oh, no. Crude up 68 cents at 52.05. Just been in a trading range here. Waiting to see if those OPEC cuts will really come down the pipeline. And then you have gold just flirting with 1,200 here. We traded up to the 1,220 handle earlier in the 1,220 earlier in the week, back down at 1,200. Dennis, when did you get long CSX yesterday?
I did cover it. I covered on the 43 handle and just in the lower 44s here, obviously. Good cover, I guess, because it went up to 45.5 there yesterday. But, you got to eat it when you're wrong, and I lost almost 4 points on it. Well, 3.5 points, I guess. So, that was one of those trades. I talked about it yesterday, and, you think you've got a small position, what can you lose? You end up losing a pretty good chunk of money because, you let it go so far against you. So even though if the position's small, stay disciplined. That's what I learned yesterday.
All right. The only thing, I saw a nice article on the Benzinga site by Wayne Dugan, and we're trying to figure out why, why do this now? And I saw that the only thing fundamental I saw was they were operating at 70% of their capacity, right? So if he has something that can get him up to that full capacity, then it's worth the play here. 46.01 is what it's hit in the pre-market session. Just hanging out at 44.75.
Yeah, this is something that doesn't make any sense to me, but this market, like I've been saying and jokingly I've said on the show before, sometimes the fade logic trade just applies, and you'll see these ridiculous moves on a dry ships, and this isn't dry ships at all, but it feels ridiculous. I mean, CSX, this is out of the norm for it, so I feel like it was the payday. I feel like if you were long the stock, I would be, booking the gains. I obviously tried to short it and didn't work, so, you can tell, how I feel about it. It doesn't make sense to me that just because there's an activist investor involved and they potentially might, get involved and potentially get a bid or take it private or whatever, I just, this is more rumors still to drop in the top 25%, still on rumors here of all this stuff. Just doesn't make sense to me. So, but this market is like that. It does a lot of funny things, and if you get the ball going in one direction, it could continue rolling in that direction for a long time. And that CSX ball is currently rolling up.
Well, wait for the news. Keep an eye on your Benzinga Pro to see if there truly is, who it is, and what they're doing, and what price they want to pay.
So let's jump over to other news here, and this news, and they're talking about it in the chat too. Fuzzy was talking about it. Bristol-Myers, man, this lung cancer drug has just taken its toll in the stock. It's had some gap downs in the past before. I think this was why it gapped down 6 days ago. Now it gaps down again here. Spencer, what are the details, first of all, Bristol-Myers, and then we'll talk about the implications for Bristol-Myers and for Merck.
So they're not going to pursue an accelerated regulatory pathway for this drug for FDA approval. Is what I'm gathering is the news.
They're backing off. Merck's got a big lead here because they always have a competing drug that's already got that. That's already I don't know if it's been granted, but it's already out there. They got the big lead here. So this drug was going to compete with Merck's drug, and obviously now that's going to be a lot slower process here. So Bristol-Myers loss here again. Looks like Merck's gain, although Bristol-Myers is trading down 8% here in the pre-market. Merck's up 3.5%. I couldn't resist the Merck pop. So actually, I played this a couple of ways here. I did get long it last night because I was like, oh, that's got to be good for Merck. So I did buy some Merck last night on this news, and obviously it did get a pop, and I sold that. And then, I was like, I should play this from the short side here because every time it gets up to 63, the dang thing just comes right back in. So I was trying to play from the short side as well, which worked out. I've covered it here this morning at 62.50. I mean, I get it that it's trade up. This actually does make sense to me because they're going to have this lead, and this could be a big revenue generator for Merck as well. So it does make sense that Merck, to me, that's trade up 3%. But every time Merck gets a pop over 63 on this, it seems to sell back off. So we've seen this multiple times. It's done it here again this morning, not to an extreme, but it's trading down at 62.50 right now. 63 just has been a major resistance point for Merck.
Man, Dennis, being able to look both ways on a trade like that,
It was a good trade.
Man, that's a sign of a great trader. I know you had some signs of a little bit of an undisciplined trade yesterday, but you got caught in some news here to be able to play it from both sides there to catch, because it looked like it just went straight up. You had to lift an offer on that one, right?
I did.
You didn't get
on the news. Yeah, I did. I was lifting an offer because I was like, I looked at it and it sat there for like a few seconds. I was like, no, this has got to be good for Merck. So I lifted the offer. A couple other people, you can see other traders, lifting offers, and it ran all the way to 60. The scalper blood in me, I saw a little bit too soon at 60. I bought, down in the mid 60s, and it went up to over 62, and I'm like, thank you. And then it went over 63, and I was like, wow, I've already sold, but this is a little bit ridiculous here. So that's why, when it got over 63, I decided to try from the short side, and I brought it in for another 50 cents on the short side. So that one worked out.
How big was the spread when you lifted that?
It was actually quite tight. It was early, but I would let. So if you're trading news after hours, like you're looking at good news on something, you're throwing out a bid, you're not getting hit. Like, what did you always say? You taught me this, Joel. What did you always say? When stocks are going up, they're not hitting bids.
Yep. And when it's going down, they're not lifting offers.
They're not lifting offers.
Yeah.
So, you've got to look, what's in the book, and you got to take what's there. I mean, there was not much stock in the book. There was a little bit there, but whatever was there was getting scooped. So I wasn't the only person scooping. There was other people scooping too. But Merck is fairly liquid after hours. Like, it's not like a Bank of America. It's got a 1 penny spread, but usually within 10 cents, 15 cents, you can get some stock. So, you're taking a little bit of a chance, but we've seen this before. We've seen this play out where Bristol-Myers, starts getting hit on this news, and it's good for Merck. So just from the history of it, I kind of knew that, and that's why I was able to make some money on the long side on Merck last night.
All right, real quickly here, 63.25. That is your pre-market high. That coincides perfectly with two highs that you had at 316 and 324. That was on the 11th and 12th of January. You also kissed 63 in December. So that's still level of resistance. Better place probably to exit long to get too aggressive on the short side. And BMY, I mean, man, this thing just keeps having bad news after bad news.
Headlines are killing it, man.
Yeah, I mean, I don't know how much money, what the potential write-off is going to be for this debacle here.
Well, I think the drug could still come. It's just going to be. They're not completely throwing in the towel here, correct, Spencer? It's just not going to go on an accelerated.
They're not going to win the race, essentially.
They're not going to win the race. Merck's going to win the race here, and that's why they're going to have such a lead here. So this drug might come to market eventually, but it's not going to be an easy road for it. And that's, why you're seeing the stock continue to get hit, because it's a huge generator. These lung cancer drugs, this is, something that is going to be a huge generator for Merck, and it could have been a huge generator for Bristol-Myers too, but they're struggling with their drug. But that being said, we've hit this stock pretty hard from this news. Wouldn't you say, Joel?
I mean, it's getting hit.
Multiple headlines.
Yeah, multiple headlines here. 50-10. I mean, we're looking right at the low of the pre-market session. Let's see if someone tries to bring in some stock here at 51. Yeah, 50-10. I mean, that was your
I like
November.
that.
Yeah, November low. I don't know. I'm not quite sure it's going to get there, but
Again, it's hard. This market, we've seen these pesky trends continue here, so it's hard to just be a fader, like I've talked about, before. In the last few months, the fade trade has been a very difficult trade. I got hit, yesterday on CSX trying to fade the move. Yesterday, I went with the move with Merck. I made a little bit on the fading when it got over 63. But if I'm short Bristol-Myers and $50, it looks big. They've been down here multiple times for these same reasons before, and $50 is just a big psychological level. So if I was looking for a bounce level, not that I am, I think $50 is probably a level where it could bounce.
yeah, and if you're short, I mean, you get a windfall, you get news like this. I mean, you may want to wait to see. I mean, keep an eye on the pre-market low. This is a liquid stock. Let's see if it can hang there at 51. If not, I'd even go like 50-20. I wouldn't hold on. I mean, because you could get like that 50.05 print, and then you're thinking it's going through 50, and then boom, it gets a bounce. So we'll see what the big boys do at 51 and also at 50.
Lots of other news here. Let's jump to the earnings parade because there was a parade here. We only got 9 minutes before Paul and Monica here, so we're probably not even going to be able to get them all in. But I played this one well too, so it's funny. I started the day really rough with the CSX, taking that loss. I ended up having, a really good trading day because I ended up shorting IBM above 170. I shorted a couple times. I actually played it 3 times last night on this earnings report. I shorted up at 171, and then it came in. I shorted up at 172, and then it came in, and then I shorted up at 172 again, and then it came in. And I obviously cover a little soon, but I took 2 points. I took a point. I took another point. So I ended up taking 4 points off it, which was pretty good. I mean, if I would have just held, I would have been better off 172 to 164. I'd make 8 points there. But I got that scalper blood. Reason I kept selling over 170 is 2 reasons. IBM has a history of bouncing on their reports and then selling off, and that's exactly what we saw last night. Second reason, I was like, 170 has just been like a rock on this thing, and now you're going to trade up 172 on light volume. I'm like, I don't know if it can even open over 170, even if it, stays in good news. And then it started rolling over. So that was the reason I was shorting up at 172 last night, was because I really didn't think it was going to be over 170 come next morning. So I figured, I think I'll be able to cover at 170. Trading is just speculation. So, but multiple highs there you can see on your chart. And there was the big institutional seller at 172. That's completely out of play here this morning because the stock tanked. And now we're under 165 and we're back at 164. This stock had been range bound between 165 and 170. So, we'll have to see what happens at 165, but 170 looks like it's off the table now.
I have to agree with you. This one I've been thinking about just trying to, go long term here. Thinking it would finally, just catch up with the market, get a break, break out over 170. So I'm glad I didn't play this one because I would have been lamenting not selling anything against it in the after hours. Just looking at the daily here, I mean, we lost that 166 level. And that's big. And I think until it gets back to that over 166, I think you're going to have some problems, in this issue. It's creeping back up now. Goldman calls IBM earnings low quality. I mean, a nice beat. They're pounding it. I mean, I don't know if they've taken advantage enough of the cloud computing or whatnot, but getting back over 166, get back in that range is key. And the only reason I say that, and I'm kicking myself too here on this Goldman Sachs, you were waiting for a driver, right, to take it out of, it was like 238 to 245 for all that time. And then finally the earnings was the driver. You broke out of the consolidation period. I don't know if it's dead yet. But, when you have those long consolidation periods and then you break through the bottom or the top of the consolidation spells trouble, that's what I see in IBM.
Yeah, and I agree with you here. That 165 had been support. And you just think about it. Same story with Disney. We've been talking about these levels and these big institutional sellers come into play, and it makes it very difficult life there to get through it. And if you can't get through it in a few days, then, all of a sudden they start coming in with sellers, and, Disney was struggling at 110. IBM struggled at 170 for a month. So, we were up there 1, 2, 3, 4, 5, 6 times almost on the kisser. We couldn't get through that big institutional seller. We got through it last night after hours, but that big institutional seller isn't sitting out there after hours. So, that liquidity is probably coming back in at 9:30 again. And is it going to have enough gas to get up over it? Probably, I was thinking that it wouldn't, And then also, coupling that with the speculation that, IBM has a history of giving back its gains makes me, get a little more bearish. And now that you're down here, now you're through the 165. I think there's all kinds of overhead resistance here. Like people who bought it last night, quite a bit of volume trade up at 172, 170, 170, 169. Those people might be underwater. So if this thing gets anywhere back in the upper 160s, over the course of the next few days, there are sellers all over the place there now. So path of least resistance, I feel like now is on IBM is to the downside, and I feel like I'm a seller of rallies on the stock.
And I don't like this buy. If you see the big bar that IBM had, I don't know if this was like during the election. A lot of error between 160 and 165. I'll just give you that low. I mean, if things get really cranking to the downside, which I don't think they will, your December 7th low, 160.39.
Another earnings here this morning, the big gun General Electric. Spencer, how did GE do?
GE this morning, Q4 EPS 46 cents. That's in line with the estimate. Revenues at 33.1 versus $33.6 billion.
This is taking out a critical support here too. 31 had been support here a couple of times. You've had this little slow march down from 32 to 31. Now you're through it. It's somewhat concerning here that a lot of, you talk about the market overall and we talk about Dow 20,000. We're starting to see some major, components here, not only in the Dow but in the S&P, starting to take hits and starting to take out their support lines. And you wonder, if this, we obviously have the inauguration, we have some other catalysts here today, but this earnings season has not been good to stocks yet, Joel.
No, I know. I mean, the chart in this one, I mean, you said it. They just walked this thing down. I mean, I was looking at it. I was hoping I was thinking 32 was going to hold. And then when it blew out that one day and caught everybody and went up, I kind of took it off my radar. But then it came back in there. 32 established itself as resistance, and then you just have had step-down sellers. I think I just counted it up. You had 14 of 18 lower highs, so someone's just saying, get me out, get me out. 32 and then 31.50 started to be the resistance. So, man, a big string of lower highs. You're under, did you get under? We're well under 31 here at 30.79. Yeah. Man, if I was really holding out, 30.62, that was your low on December 1st, only 15 cents away from there. I think I'd get it down 60, 70 cents, 30.62, 30.50. Let's see what happens with GE. If you start to get a rebound here, in order to fill the gap from yesterday, 31.05, but you'll probably have some sellers lined up. Now the whole number 31 will probably be your good resistance.
Full disclosure, I do have this in my investment portfolio, but I've had it in there for about 10 years. So I'm sticking with GE long term. Short term, I have no idea here. It just doesn't, this is just a tell for the overall market to a certain extent that we keep taking out support on a lot of key stocks. Let's talk Procter & Gamble. Let's go in the other way here today. PG getting a nice pop here in the pre-market. A lot of overhead resistance on this one too as you come into the 88 area if we can do that. Spencer, what Procter & Gamble have to say?
Q2 EPS $1.08 versus $1.06. Revenue 16.9 versus 16.77 billion. So a beat on the top and a beat on the bottom.
This is a big pop for PG. Trading up $2.50 here. We've had multiple highs. We talked about the seller at 90. That was a long time ago, back in September and October, and it kept refreshing up there. So we know you start getting up over, to that area. It's major resistance, but you got to start analyzing. Buying a stock up $2.50. Okay, if you really started the ball rolling, and it's not happening today because it's PG, but, what's your upside here? Long-term upside, maybe $2. Long-term downside is a lot more. And if we do get into a rising interest rate environment, that's not good for PG either. So that's why I think I'm a fader of the pop. I'd love it to get up to around that $88. That's where you got back in October. I think there's probably some institutional size kicking around up there. It's too many levels up in the book, so I can't see if there's anything there. At least there's nothing, there that I can see here yet this morning. But I think you're around a resistance, major resistance up at 88, and I'd like a chance to short it.
It won't get there, Mr. Trader. It won't get to. It might not even.
We went up 237. We can't go 320.
I don't know.
Another 85 cents.
Nah.
I think it could. I wouldn't be buying it. I'd be selling it up there. I just say, and I'll say
I know
this
scenario. I know scenario.
Yeah, it's scenario analysis, and I'm just saying if it got up there to that 88 area, I'm not saying, when I say, level, it doesn't mean necessarily that I want to come in here and buy at 87, because I think it could potentially go to 88. I'm saying if it gets to 88, I think I want to short it.
How about
So I'm like kind of licking my chops here, coming to Papa. Get up there that higher 87s. I'm gonna try this from the
I
short
don't
side.
think it's going to open over 87.
I don't. I'm bearish the stock, so
Okay.
you can
All
see
right. Let's not argue
my
about it.
overall thesis here is I'm a seller of the pop. I want it to go a little bit higher because I'm greedy. I want to try to get it up there at 88, but I don't know if it's got the gas to get there. All I know it's been climbing the entire pre-market session. It's still got an hour and 10 minutes before we open. Never know. So I'm going to be sitting there ready and rearing to go if we do get up there, in the upper 87s on the short side. But
All
I'm
right.
a fader of this pop. I think, there's a lot of people who are down in the stock that bought it back in October and September, and when everybody thought it was going to 100, and obviously, that's when I sold my long-term position. So, valuation, dividend, a lot of things still working against Procter & Gamble here in the long run. So I'm bearish longer run on
I also want to mention their guidance: fiscal year organic sales growth of 2 to 3% and core earnings growth of mid-single digits in the fiscal year of 2016. All right, 8:20 now. We're going to take our quick break. We're going to grab Paul LaMonica, a digital correspondent for CNN Money. So we'll be right back with Paul.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we have Paul LaMonica on the line, a digital correspondent at CNN Money, and also my favorite tweeter in the Twitter sphere. Paul, how you doing?
You're way too kind. I'm good, thank you.
All right, so Inauguration Day, a lot of events have went on leading up to this. The bottom line is we have the White House, a change in the White House, implications for the market for the next 4 years. That's a really broad question, but how would you like to attack it?
Yeah, I think obviously we had an amazing market rally immediately after the election. The first few weeks, I think most investors hoping that the combination of Donald Trump and his proposed stimulus plans and a Republican Congress would lead to a pickup in economic growth and therefore obviously earnings as well. But right now, I think investors are growing a little bit more skeptical because at this point we really need to see the details.
And sectors here. I mean, they talk about infrastructure. I mean, I kind of feel like we're going like kind of backwards here, talking about, the steel stocks and the infrastructure. I mean, how quickly can these things happen?
Yeah, I seriously doubt, even though you might start seeing the term shovel-ready used, very similar to what happened 8 years ago when President Obama was also looking to try and stimulate the economy, obviously from a much worse position back in 2009 than it is right now. I think that you are going to maybe see investors continuing to look at whether or not companies like steel, companies U.S. Steel and Nucor and maybe other industrials, Caterpillar, Deere, U.S. Concrete. I actually interviewed the CEO of U.S. Concrete just after the election, and he seemed pretty excited and admitted that he also voted for Trump about the possibility of rebuilding roads and bridges, but he even conceded that none of this can happen that rapidly. So I think maybe the enthusiasm needs to be tempered a little bit about just how much stimulus. One, I mean, we don't know if it's going to be that $1 trillion number that keeps getting bandied about. And then two, how quickly will any of this really happen and then trickle down to the broader economy?
Hi, Paul. Dennis Dick here. Just a question from one of our listeners there in the chat, Ecograph. He's asking, about the stability of the leadership after today. Obviously, I think, a lot of people are concerned. There's some people, that are rah Trump here. There's a lot of people who are concerned about the leadership too, and his use of Twitter and, his outspokenness, what he might say. What is, do you think that, with Trump coming in here, that the investor mindset has changed?
I think investors are now just a little more wary. I think that in the immediate aftermath of the election, maybe some on Wall Street were willing to sort of write off or dismiss in an amusing sort of fashion all of the Trump tweets. But it was one thing when he was doing this as a candidate and even as president-elect. Now that he will be the president, most people I talked to who had said they weren't really worried that much necessarily about Trump's tweets and his outspokenness. I think now they realize that it's going to be different once he is president, and it's going to be very frustrating, I think, for investors if we have a situation where Trump tweets something that rattles the markets, and then you have, the quote unquote, for lack of a better term, adults in the room like Pence and potentially people in the cabinet like Wilbur Ross and Tillerson having to translate the tweets and explain to the market and try and calm them down that you can't take these 140 character rant missives as gospel, and that we're not going to negotiate via Twitter, even though he is attempting to sort of publicly shame some companies into getting what he wants.
Hey Paul, this is Spencer. Quick question here. So I'm looking at a chart of the S&P 500 index from the week following the last 8 or so inaugurations, and so if I can break it down for you real quick. With a couple of exceptions, being Reagan's first, George W. Bush's second, and Barack Obama's first, it looks like the S&P reacts pretty positively to inauguration, to new presidents, or at least inaugurations in the week afterwards. So how do you see this playing out, at least in the short term, over the next week?
Yeah, I think it's going to be impossible really to predict right now what the market's going to do just because of the inauguration, because you have to keep in mind that one of the unique things about the inauguration period is that it also comes in the midst of companies reporting their fourth quarter earnings. So, full year earnings, giving some guidance maybe for the first quarter in 2017. So I'd be reluctant to say that what happens next week will be all about Trump, because there's a good chance that many of the companies that are on tap to be reporting their earnings next week could be a bigger driver, perhaps, of what goes on, than any policy discussions. Not to dismiss what Trump is going to do for the market, but you've got McDonald's reporting earnings on Monday. You've got 3M reporting on Tuesday. Verizon, J&J, Trump's favorite defense company, sarcasm intended, Lockheed Martin. There's a lot of big news next week that isn't necessarily about what's happening in Washington.
Paul, let's move into earnings season here, and obviously we're coming into the heart of earnings season, but we've had some big companies report here already. We've heard from some of the banks. We've heard from IBM last night. We heard from General Electric here this morning. And this earnings season, it hasn't been that great. I mean, we've had a big run up into this earnings season, and I mean, a lot of these companies, Big Blue had an okay quarter, but they're hitting the stock on it. What do you think that means, when they're not rallying on okay reports?
Yeah, again, I think it really is all about a bit of cautious skepticism that people might have about whether or not this rally can keep going, without decent earnings growth and especially sales growth as well. I wrote a piece yesterday, where I mentioned one source talked about how volume's been relatively light since the election. Also, I think so many people are just waiting for more clarity from Trump and the rest of the leaders in Washington, as well as big businesses, about the health of the U.S. consumer and what's going to be happening globally. And I think globally is such a key concern right now because in many respects we're seeing the rise of isolationism and protectionism, not just in the U.S., but many of the nations in Europe as well. And I think that's alarming some investors who've gotten used to this notion that, isn't it great that a company like Apple can do big business in China? That may not necessarily be something that the current administration actually approves of.
Paul, I saw your tweet about Herbalife, and you said I liked it, and my thoughts exactly about we'll be talking about Herbalife when the next president takes office. It seems like this saga has been going on forever. Some bad news out today, some lower guidance here. Give us your thoughts on the Herbalife saga.
Yeah, I mean, honestly, the reason I tweeted that is because every time Herbalife is trending, either on Twitter or StockTwits, and I see the latest news, I do kind of just shrug my shoulders and sigh because I don't really care anymore, other than when you have these big moves on weak earnings or accounting issues or the like. I'm just kind of fatigued by this particular company that I think got an inordinate amount of attention because of Bill Ackman, obviously, and his crusade against it. So, to be totally fair, like I've given up really following the company all that closely. It's just every now and then when I see the ticker popping up and trending, I just roll my eyes and remind myself that it's still around and it's still a thing that some traders apparently care about.
Moving on here, a lot of trepidation about what's going to go on with Fannie and Freddie here. The market hinging on the comments from the testimony yesterday. I mean, a lot of optimism that a lot of value is going to be released in this. Any thoughts on that?
Yeah, I mean, I think Mnuchin's comments took a lot of people by surprise, as you saw with the stocks. They were up once his testimony started, and then they immediately tanked when he seemingly backtracked on comments that he made, after the election and after he was named to be Treasury Secretary, nominee by Mr. Trump. Back in late November, there was this notion that, of course, we're going to get Fannie and Freddie unshackled from the government and privatized, and that's good for companies, investors that already own big stakes like Fidelity and Bruce Berkowitz at Fairholme, and then Bill Ackman again. But yesterday he seemed to indicate that the comments about recapping and releasing maybe were misinterpreted, and that Fannie and Freddie could still be under government control for a little bit longer, and I think that spooked a lot of investors.
So, Paul, before I let you go, what did you do with your Dow 20K hat? I mean, I know you got it. I know your office there. You still got it there on your desk, and you're just getting ready to break it out. We got within.
I joke about the Dow 20K hat. To be brutally honest, I joke a lot. I'm often sarcastic, hence I end tweets often with hashtag sarcasm. I do not have in my physical possession a Dow 20K hat as of yet. I'd be happy to get one if and when the day finally comes. I did see some people with an almost Dow 20K hat at the exchange not that long ago. So, hopefully people won't be wearing that one for the next few months or dare I say years. I honestly don't think we're going to be in the midst of a bear market. I do think we're going to get there eventually, but it would be nice that we can hit it and finally move on to more important things.
Paul LaMonica, digital correspondent at CNN Money, at LaMonica Buzz on Twitter. He's a must follow. Great insight during the trading day. Paul, thanks a lot. We'll speak to you again soon.
Thank you very much. Enjoy the festivities today and have a great weekend.
All right. S&P's getting a little bit of a boost here, 2267.75.
Buy balances.
But okay, you want to go into those?
Yeah, and they're huge. Remember, again, it's option expiration. We haven't even mentioned that. It kind of snuck up on us here, but this is the big, day for a lot of jockeying. Institutions jockeying against their option positions there. So you see a lot of action always on the open and the close on the option expiration day, the third Friday of the month here. We're seeing a lot of buy imbalances here that just came out at 7:30 or at 8:30 here, which obviously just 3 minutes ago, and that's helping the S&P lift a little bit here. I mean, they're big, but again, a lot of institutional action, so they will, you got to take it with a grain of salt here. Just because they start big doesn't mean they're going to finish big. It's still an hour for more institutions to come in. So right now, Citigroup's looking at 288,000 to buy. Bank of America's looking at 915,000 to buy.
That's big.
JP Morgan 3. These are huge numbers. But again, all it takes is a couple institutions to say, look, I got a Bank of America, I got $1 million to sell here, and boom, it changes. So on this day, they're very what I would say volatile, that information. They'll be showing buy and bounce, and then they'll flip to sell, then they'll flip to buy as bigger institutions come in and offset some of those or pair off, with some of these other traders that were showing their hand early.
All right, daily NVIDIA level for RMH, and I'm kind of glad. I mean, I'm glad this January because now I don't have to look at my NVIDIA puts anymore that are going to go off the board worthless here. But it was only like a quarter of my position, so I was able to make some money on it. Still getting caught holding the bag on this one. The timing was way off on it. But now it's off the board, so I can start new. I mean, it's been in a range. I mean, we were wrong that other day, Dennis. We thought if it took out that,
I thought it might,
yeah,
and it snuck out,
yeah,
and it popped right back.
Yeah, good call by RMH if you stuck with it. I mean, a classic dip under the whole number. The previous low of the move, 99.38, went to 99.11. Boom, and then turned around to close at 102.95. Strong day yesterday. One good thing to keep a look at. The close on Wednesday, 295. The low on Thursday, 298. Straight up. Let's see what happens here. Needs to take out yesterday's high, of course, at 06.46. You had another high in that area at 06.20. So let's see what kind of work you can do in a 106.5 handle. And also, you've had a 21-point break, 10.5. Longer term, 110 would be the area of control. That would be a 50% retracement of the move off the high.
Let's jump back to the earnings parade here for a minute. American Express reported last night. That stock is getting hit here on their report as well. Stock closed 76.69. It's trading down $1.50 here in the pre-market. AXP, Spencer, how do they do?
And 91 cents versus 98 cents, so not good there. Sales 8 billion versus 7.95, so a slight beat there on the sales. As far as guidance goes, fiscal year 17 EPS $5.60 to $5.80. That's in line with the $5.75 estimate.
Stock trading down $1.50. Joel, give us a level.
74.68. That was the quick spike low, but you've seemed to recover there, hanging out in the 75 handle. Boy, yesterday, if you would have been looking this thing ahead of earnings, you would have said, man, there's some resistance here. You've had multiple highs in the same area. Likely not get back there today, just under 78. Someone was targeting the 77.60 area. Coming back on the downside, I like to see what happens at 75, and it's just because these clusters of 3 or 4 lows are right in that area. So opening into support, I think even if you do get under 75, keep an eye on that pre-market low of 74.68. I mean, you do have a gap to fill in the lower 74s, but surely got to take out that pre-market low first.
Shirley. Don't call me Shirley. All right.
Airplane, right? Airplane?
He is serious, and don't call him Shirley.
I had to just try it. Schlumberger also reported here, SLB. We know these oil stocks seem to just move with oil overall, but SLB is trading down a little bit here in the pre-market despite oil trading up. So we better talk about the earnings report from Schlumberger.
27 cents, that's in line as far as EPS goes. With revenue, it's $7.11 billion versus $7.07 billion, so a slight beat on the revs.
Schlumberger, Joel, has been on a run, really, if you look at this stock and you go out to the weeklies. This stock, 2016, when everybody's throwing every oil stock out, it got down to $59. So it was a pretty good 2016 for it. I mean, now we're up here at 87. You can start talking, you're ways away from all-time highs. Those were back when the stock hit 118 back in the summer of 2014 when oil was a lot higher. What do you think here, though, Schlumberger, though, just from a technical basis?
Just that 2-day bar, just a lot of air in there, down to under 86. Pre-market low did get into that area. Pre-market low is at 86.10? 86.07, that's your pre-market low. Trading quite a bit above that. So I think you get back in that area, you can see some support there. Coming back on the upside, since you are red now. Let's see what happens at the close. The close in 87.20, 2-day close 87.48. So Let's see what happens if it gets back into the 86. I just wanted to ask you, Dennis, you were talking about a potential setup in ExxonMobil yesterday, multiple lows in the same area. Were you able to, were you able to catch it there when it went through?
No, because I didn't look at it again, but it would have been good. We had that called on the show. We said if it took out that double bottom around 85, 86, it opens up to $85. Exactly what it did. It whooshed right through it too. It wouldn't have even had to been the trade, Joel, for more than 20 minutes because it went straight from 86 where it opened down to 85. So it would have been quick if we would have followed our trade on that one, but I did not trade it. I should have.
Yeah, you would have had to been quick. That's where something off the open.
Short the open.
Yep.
If you were short the open, you were laughing.
Yep, 13 cents worth of heat. That was probably just like one or two ticks here. 85.97, open 86.10 high. Trading into green a little bit at 85 even. Let's see if they try and protect yesterday's low at 84.59.
Downward Dog says VFC. He likes ugly charts. Well, this one's ugly, so you'll like this one. VF Corp. Another retailer that, the retailers we've talked about them. JC was talking about them yesterday. They're just out of favor. All the retailers, even though this is, VF Corp, obviously, selling clothes. So, they can sell these on Amazon as well. But, so it's not a physical, I don't know if they have VF Corp stores or not, but, just talking, it's not like a Kohl's, not like a department store. They don't really, that is their major business model, having a physical store. They still can sell stuff online. It doesn't matter. It's just retail, and they're hitting everything retail. So here you are, VF Corp. It's $51. It started the year way up at $75. Well, towards the end of, actually, I guess it's a year and a half ago. It's been an ugly little run here for a while for VF Corp. I don't know what turns it around.
And this would be a trade that Tommy Lackey would say, look both ways. If you're trying to pick a bottom here, you had the 2-day low at 50.49. Risking a buck here for some potential upside. Below 50.49, you still have to cut out. Maybe look for a whole number like 50. Not sure when their report, but just hanging out near the lows here. So be careful if that 50.49 goes by the wayside.
I always look at Ralph Lauren, too. It's another one that moves with this. And Ralph Lauren has had an ugly couple of months here, too. We had the big Trump rally up to 111, and then reality set in. They're like, it's retailer. And they started hitting it the last month, and it's really been hit hard. And really, Ralph Lauren is sitting at a multi-year low here right now. You go back in 2011, 2012, 2013, this was almost a $200 stock. So I don't know. And you know what else, you think about too, like, Ralph Lauren, I was actually in one of those stores over the weekend, and I don't buy any real clothes or anything, but I was just, there at the mall, with my kid and with my wife, and, you're in those stores. And I remember Brianna, we had Brianna Valesky on the show, and she was always saying, and I think Spencer, you agreed with this too, that people nowadays don't want that like brand, like showing that brand anymore. And you can always see, that polo player on every single Ralph Lauren piece of clothing there, and they're saying that the teenager and the younger kids, so maybe some of the older people still wear the polo stuff, but some of the younger people here don't want branded clothes anymore, and you wonder with everything just branded with that polo player from Ralph Lauren, if that doesn't isn't hurting them.
I think that was mostly regarding the teeny bopper retailers and like the very, very excessively large branding that they have. Ralph Lauren branding's pretty understated. There's the polo guy, but it's small. It's only on the corner.
A little polo corner.
That's not like the worst. They're not like the worst offenders of that. There are far worse offenders in that area. The teeny boppers, Abercrombie and Fitch. American Eagle, Aeropostale.
With the eagle, the huge eagle all over everything.
Yeah, no one wants that.
Dennis, come on. I know you're wearing your short sleeve pink Ralph Lauren polo shirt with.
I don't wear any branded clothes, and it wasn't because I don't like branded clothes, because I'm cheap.
And you got it.
I buy the discount $10 T-shirts and the discount $15 collared shirt because I'm cheap. I'm a trader. I'm cheap.
And you got the collar flipped up, and then when it's a little cooler out, you put on the button down. The button down to go. No,
I don't even know if I have any. I don't even know if I have one piece of Ralph Lauren clothing in my closet. I'm not sure if I have a lot of old clothing that I don't wear anymore. I have to go looking and see if there's a little polo guy sitting on one of my shirts.
All right. So did we cover Kansas State University earnings? KSU?
Kansas State. I was like, what are you talking about, Joe? Kansas State. So let's talk the KSU earnings. We know a lot of these rail stocks got a big pop yesterday. This one got the pop and then the subsequent drop, though. It ended up closing in the red. Spencer, what did KSU have to say here after the bell?
$1.21 versus $1.17, and 599 million versus 603 million.
And stock is just kind of hanging out here in the pre-market. We are offered at 84.50. It has only traded 150 shares, so best bid's down 83.50. So as of right now, they're looking a little bit down on the stock, but it's very early here and no shares have traded, so it's hard to gauge anything from the pre-market action.
Big run up to 88 yesterday. This is the one you should have been shorting, Dennis, and came in trading. Yeah. Let's make it. Let's make 84.50 the close. Your point of control. Your 2-day low down at 83.36. So this thing looks like it can go just about anywhere.
Then also, let's look at, if we're going to stick with the earnings, we didn't talk Skyworks yet. So SWKS, and they were popping 7% here this morning. Had the earnings report last night, getting a nice lift for Skyworks Solution after a huge period of consolidation, just under $80. It is the breakout above here now with the good earnings report. Spencer, tell us about the earnings report, and then Joel will give you the levels.
$1.61 versus $1.58. Revenues of $914 versus $902 million. As far as Q2, that was for Q1. As far as Q2 adjusted EPS, they see $1.40 versus $1.39, and sales at $840 million versus $818 million. They also announced a $500 million buyback plan.
It's a breakout, Joel. Technical breakout on the chart here. Are you chasing it, though?
No. 86.10. You know what this chart reminds me of? This chart reminds me of Netflix in the pre-market yesterday. You know, you had that. I mean, Netflix hit 146 yesterday in the after hours, opened up at 142, 143, ended up in the 138, 39, I think I saw last. So this is kind of what it looks like to me. You had that big bump up to 86.10, and then sellers stepped in at 85. So I look at 84. I mean, it holds 84. Yeah, maybe you can run up here and test that 86.10. But, man, I'd hate to be long this thing if it opened up, 84 even and a big old fat offer sitting there. A lot of room on the downside.
Jumping over here just to a couple other ones. If you want to go some smaller earnings reports here, we had a couple of banks here report. STI, first of all, do we have their numbers? It hasn't had a trade here in the pre-market, but it has been running here, and along with all the other banks here over the course of the last couple of months. Spencer, what SunTrust banks have to say?
90 cents versus 88 cents. Revenues at 2.19 versus, that is the estimate actually, $2.19 billion is the revenue and the estimate, so in line there.
Stock just hanging out. It's bid here flat, 53.84. Best offers up at 55. I mean, all kinds of resistance to get in the upper 55s and 56. I don't know if it's got the gas to get there. Yesterday we saw a smaller regional bank, BK, open up flat and then tank. I'm not sure that's going to happen here or not, but not a great earnings report.
Keeping an eye on the double bottom, 53, 56, and 58. Also, you had support in that area at 53.51 on December 14th. So north of 53.70 area, I'm bullish here under that. You have a lot of room on the downside. Yesterday's high, we're 30 cents away here. Really two highs at the 54.50 area. So play the half numbers, 53.50 to 54.50, support and resistance.
And Synchrony Financial, which was the GE spinoff, also reported here this morning. It is bid up at 35.75. No trades to report. Best offer is way up at 37.48 here right now. Spencer, SYF numbers?
Q2 EPS 70 cents versus 67 cents. Revenues of $3.63 billion versus $3.56 billion. So beat on both.
I don't know. These things have had such a run here. It's hard to come in here just chasing them up. If they open up here today, I'm almost fading just because they've had such a run.
Yeah, let's see.
And a lot of the other banks have been hit on their earnings.
Yeah, 36, just above 36. You got some levels to keep an eye on. Two highs, 614 from yesterday and 623. So going to give that triple star resistance right now. Coming back on the downside. Not holding the close, so the next number to come and play would be yesterday's low of 35.56.
Chat's talking about dry ships. Ace was talking about dry ships there yesterday as well. They got another reverse split coming, I guess.
No way.
Yeah, that's what they say. Dr. J is saying on January 23rd they're going to do another 1-for-8 reverse split. All this company does is reverse split their stocks. It goes up and then it comes down. I mean, I don't know what to say. It's getting a 5% pop here. People probably already anticipating that, hey, you get this dry ships run. Maybe we'll get another short squeeze here as they take more stock off the board. I don't know. This company just keeps flirting with, zero, and then they reverse split it and it goes up again. So this is just, speculative again. We've got some action here this morning. It's trading up 5% here in the pre-market, which is 5 cents. So from the fall from grace from the 120 down to $1 here once again, and they got to reverse split the thing again.
How can they do that? I mean, isn't there
taking stock off the board to get the price up? And then it falls. I mean, this thing has been the longest road to zero ever. They keep reverse splitting. It's hard to go to zero.
Look at all-time high, let's see, 189,618.48. So
what is the all-time high?
189,000.
It's reverse split so many times. It's 189,000.
618.48.
Wow, $189,000 a share. So the person buying at $1, is going to have trouble getting to that all-time high of 189,000.
Is that? What about? Can we find like the that?
What is the float on this thing now? Does anybody know? Is there going to be no shares outstanding eventually? I mean, reverse splitting it. So
Citigroup all-time high 591.25.
Gotta love these reverse splits,
AIG all-time. The all-time high in that's only 2,058. So that's.
I know. I love the people. I have this all the time. People say, "Well, AIG came back, from the financial crisis." No, it didn't. It's at 70. It was at 70 before. They did the 20-for-1 reverse split. It never came back. Hey, trust me, it didn't come back. I got hurt in the financial crisis on that one. I know it didn't come back. So
all right.
It's come back from the lows, but it didn't come back to those highs, and it never will. I mean, when you dilute, that much too. There was a lot of dilution there, obviously, with AIG and with Citigroup there. It's hard. They can't come back. I mean, these things would be the most valuable companies in the world if they got back to those highs.
By far. Have we done anything on ratings?
No, you know what? Let's go jump over there. Spencer Israel's been sitting there waiting to get into the ratings here. Spencer, give us some hot ones.
Yeah, there is a couple interesting ones for you today. JP Morgan downgrading Teva Pharmaceutical shares to a neutral. We have a Domino's Pizza upgrade, which is interesting because we didn't talk about the Reverend's Domino's short from a few days ago, but KeyBank is upgrading Domino's this morning to overweight. We'll have to get someone next week maybe to come on and talk about Domino's Pizza so I can figure out who to believe there. Aegis initiates coverage on Amazon about time, I guess. They announced at a buy, so they like it. Apparently, everyone does. $953 price target there for Amazon, or at Aegis for Amazon. And those are the most notable ones that I saw this morning. I'm looking through my list right now. Nothing else really jumped out to me.
All right, let's start here. Let's start here with the Domino's Pizza one. Frequent guest on our show, the Reverend Father Emmanuel Lemelson, came out with a short thesis on this one. We're going to have to get him on next week to get the details of it. This stock has just been incredible. If you would have bought this thing in a financial crisis at $2.61, you'd be sitting on a nifty gain here. Looking at the monthlies here, you got 4 months of resistance in the same area, so that could be a little troubling. So I don't know if I'd be running out to buy it. All-time high was made at 172.62. We hit 172 even this month, so not saying the top is in, but important resistance. A little bit shorter term, 2 higher lows from the last 2 days when getting hit with the Father. On the downside, not looking really for any continued downside until you take out the double bottom of 164.32 and 64.49.
Just to let you know, all the buy imbalances that we saw this morning are now sell imbalances. So they flip around a lot on this day, just like I was saying. Now they're all in the red. They might go in the back to buy imbalances here again, but most of them are all sell imbalances here now. So very volatile imbalance information here this morning, which is typical on Option Expiration Friday. Dr. J wants to know about Tesla. We talked about it a little bit yesterday on the show. Had the upgrade there. I was like 250. Looks like major resistance. Couldn't quite get there. Only got up to 248.68 before they pulled the rug out from it. I'll stick with that. It is trading up a buck here this morning, but I think 248 to 250 still major resistance for Tesla. It's been a hell of a run here, and I feel like it's getting tired now.
Yeah, maybe a couple days of consolidation here before you really try and predict the next move. It's had some nice bump up, 3-4 days of consolidation, another run up, more consolidation. So bulls, you're hoping for little consolidation here, maybe between 240 and 248, 250. Hold the 240 level, then make another attempt. 260 was your high back in April, but taking a little breather here. Spinner, we did talk about BMY at the top of the show.
Give an update though here, because
Okay.
it's just kind of hanging out. We liked 50. Me and Joel thought it might bounce at 50 if it got down to there, but it bounced there in the pre-market. I don't think or in the after hours. I don't think it's got down in the pre-market though.
No, I think someone's trying to bring some stock in at 51 here. Quick windfall if you took this home short, especially if you're trading the puts or something like that. Bringing the stock in, not worrying about it. So we'll keep an eye on that. And then a stock that Gravy, GRVY, Chinese Korean online gaming company.
Gravity Company. And this stock is fighting gravity, I tell you, because it has been on an incredible 3-day move here. It was $10 4 days ago. It's now $20.96. We know sometimes these Chinese stocks, when they start taking off, they really go. We saw the stock do the same thing back in October when it went from 5 to 15 in a week and a half. That's a triple. So if you're thinking 10, if you think it could do it again, 10 to 30 would be the next triple. I don't know if it can do that or not. Go to 22.68, but they're hard to fight. I mean, this is a thinner stock here, and the ball gets going one direction. It can go for a while here. So what's Nick say? Too high to buy, too hot to short?
Yeah, exactly. Too hot to short, too high to buy. This one, that's an odd lot that knocked it down here in 1989. 100 measly shares have traded on this. But if I did have this long here, boy, I'd like to see it just start out green and stay green. The close of 2096. That's the mark. Oh, man, this thing is almost trade by appointment only. 111,000 shares have traded. I just would longer term, you're looking at that 2269. I know I got through there, but if you go back to the monthlies, man, this stock got up to 22. This was what is it here on my monthly chart here? This was back in 2012. April of 2012, you had a high at 22. So keep an eye on that 22 area, but you definitely want it to stay green today.
I have an update. I have an update for Schlumberger in our in ongoing series. Things not to say on a conference call. CEO Paul Kipsgaard said that the current business environment is becoming unsustainable for us.
Really? Jeez. Oh my gosh.
That's an ugly word. I'm surprised it didn't hit it harder then. 86.50. It's trade down about 30-40 cents since those comments, but yeah, that's not a good word.
86. We had talked about that level. I think that low was in before, so they haven't taken through the pre-market low of 86.07. That's my number on the downside here. I guess 85.79 was your 2-day low. But let's round it off and just call it 86 even, an important support level. But man, that's the kind of comments that you really don't like to hear.
All right, just 1 minute here left here. So quick overall market thoughts here. It's an interesting day. You're seeing a little bit of rally in some of the financials. You're seeing some of the defensive stocks, a little bit of profit taking, although you got to watch some of the consumer stocks because Procter & Gamble's getting a big lift, and that is dragging up a stock like Colgate this morning. I noticed CL is trading higher. Some of your other defensive names, if they've got, consumer products like Procter & Gamble, like Johnson & Johnson was trading up this morning. It traded all the way up to $115. They obviously have a lot of consumer products like Procter & Gamble as well. So, keep an eye. There's a lot of individual news here. IBM might put some, pressure on a stock like Accenture, but although IBM has come back a long ways from its lows too. So, it's an interesting day. A lot of mixed market here this morning, though, despite the S&P futures trading significantly higher.
And, we just talked, I think it started the week out, started out on Tuesday, talking about the consolidation in the market. And here we are on Friday, and we're in the exact same place here. Look at that, Dennis. Holy mackerel. Look at that S&P chart. I mean, look at this. We're going back 2, 4, 6, 8, 12 sessions here, and we've just been clinging to the 2265 level. I'm going to stick with that one. I might send an email to Nick and say, help me out here and put on some kind of option strategy to take care of this. All right, it is now 8:59. We are going to wrap up today's show, and Spencer is going to preview our shows for next week.
Yep, got a good slate of guests for you of Tommy Lackey, Nick Shaheen, of course, as usual. But we'll also have Jeff Hirsch, Stock Traders Almanac, and Marie Band will join us. She hasn't been on the show for a while. Chris Temple of the National Investor, and Keith Kern. So a good slate for you next week if you missed any part of our show today, including our interview with Paul LaMonica of CNN Money. You can catch the whole thing on YouTube right after our show ends, or the podcast on iTunes, SoundCloud, and Stitcher. Don't forget about Benzinga Pro. It's Benzinga's real-time news platform. You can get a free 2-week trial by going to pro.benzinga.com or calling us up at 313-723-2000. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. That is it for us this week. Hope you all have had a good week so far. Hope you have a good rest of your day. And good luck today, folks, and have a good day and have a good weekend. We'll be back with you on Monday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.